This memorandum addresses the popular interest in IRS Forms 1099-A and 1099-C, as well as the importance of the W-8 for specific financial and tax strategies. These forms have garnered significant attention due to their potential uses in debt management, trust administration, and tax withholding situations. This document aims to clarify the correct application and procedural nuances involved with these forms to prevent filing errors and ensure compliance. 1. Importance of IRS Form 1099-A. IRS Form 1099-A is used to report the acquisition or abandonment of secured property. This form is typically filed by a lender, which, in certain trust setups, is often the U.S. Treasury. Proper completion of this form requires understanding the roles of the lender and borrower. Misidentifying the parties, such as listing a dealership or mortgage company as the lender and the individual as the borrower, can result in processing issues and potential rejections. Key points. The U.S. Treasury generally acts as the lender for the purposes of this form in applicable trust scenarios. Entities such as dealerships or mortgage companies are typically third parties in the transaction, not the lenders. 2. Role of IRS Form 1099-C. Form 1099-C is utilized by creditors to report the cancellation of debt. However, the filing responsibility generally falls on the trustee or creditor, not the beneficiary of the trust. Beneficiaries should be aware that this form is intended to assist with debt discharge but is primarily executed by the creditor. The form's appropriate use within the framework of trust can aid in debt elimination, provided it is applied correctly. 3. Explanation of W-8 for tax withholding purposes. The W-8 form allows U.S. non-resident individuals and certain residents to claim tax treaty benefits for withholding purposes, often effectively reducing or eliminating income tax on specified sources. This form has been widely used by certain workers over several decades, indicating its effectiveness when properly applied. Accurate completion is critical to avoiding tax issues. As with the other forms, procedural diligence is required. Practical considerations and compliance recommendations. Research and preparation. Beneficiaries should ensure they have reviewed all related materials and resources on IRS Forms 1099-A, 1099-C, and W-8 to fully understand their applications within specific scenarios, such as trust management, debt cancellation, and tax treaty benefits. Role awareness. A clear understanding of party roles in financial transactions is essential to prevent errors in form completion. Beneficiaries, trustees, and third parties should each be correctly identified based on the nature of the transaction. Trust compliance. The U.S. Treasury, as the bank for certain trusts, holds specific responsibilities, while beneficiaries retain rights and obligations relevant to their role. Misinterpretation of these roles can lead to procedural delays or denials. Future educational opportunities. Those interested in additional guidance may benefit from further materials or resources explaining these forms in detail, including procedural videos and documents outlining correct filing steps and trust management strategies. Conclusion. The proper application of IRS Forms 1099-A, 1099-C, and W-8 can facilitate various financial goals, including debt management, trust administration, and tax withholding compliance. However, due diligence, role clarity, and procedural knowledge are essential to achieving desired outcomes without unnecessary delays or complications. Beneficiaries should continue to educate themselves on these forms' use, as procedural errors can hinder their effectiveness. For further assistance, reviewing additional instructional materials or consulting with a qualified professional is advised.